Thank you for tuning in. Dividend Dashboard here, and welcome to another portfolio update. This one will be for the month of April, where I'll be covering the stocks I bought, dividends received, and as usual, a full portfolio update where I show the total value and all my holdings in full transparency. So with no additional fluff, let's dive in. In April, I made several small but intentional additions to my dividend portfolio, continuing to focus on a mix of growth and stability. I picked 0.36 shares of Microsoft and 1.14 shares of Google, both of which are high convictions holdings for me. I've been steadily dollar cost averaging into these tech names because of their dominant positions in the market, strong balance sheets, and long-term growth potential. Even though their dividend yield are on the lower side, I'm confident they'll continue to grow those dividends for years to come. I also added 1.39 shares of Nike, which has taken a hit recently, but still has powerful global brand recognition and a strong track record of innovation and shareholder return. I'm looking at it as a long-term recovery play with dividend growth potential. I'm maintaining this position not more than 3% of the portfolio. For diversification of my core holdings, I picked 0.28 shares of S&P Global, a high-quality company in the financial data and analytics space. It has pricing power, strong cash flows, and a history of double-digit dividend growth. This is a company I plan to build over time. Lastly, I added 0.70 shares of Pepsi. I like Pepsi for its mix of consumer staples and beverages, and its ability to perform well in all kinds of market environments. Well, recently Pepsi's stock price has tumbled due to the tariff impact, and the growth of this blue chip company is limited, so I won't go overweight with this holding. In April, I received a total of $21.39 in dividends, which is always a nice little boost to my investing motivation. Here's a breakdown. ADP paid me $4.27, Nike added $2.90, Realty Income dropped $5.89 into my account, as usual with their monthly payout, and JP Chase came through with the biggest dividend this month at $8.33. Every dollar reinvested gets me one step closer to financial freedom, and it's great to see the passive income continuing to grow, even if it's just a few bucks at a time. April is a month that historically has been a low-paying month when it comes to dividends in this portfolio. Looking back at my April dividends over the years, it's clear how far I've come. In 2020, I earned just 9 cents, $4.89 in 2021, $7.02 in 2022, $10.61 in 2023, and a peak of $29.15 in 2024. This April, I received $21.39 from Nike, Automatic Data Processing, Realty Income, and JP Chase. While it's a bit lower than last year, it reflects a more focused, high-quality portfolio. One of the big changes I did this year is to high-grade my portfolio, and that includes selling companies that don't align with the investing thesis. One of the holdings I sold was Digital Realty Trust, which brought a decent amount of dividends. However, it's a real estate company heavily dependent on AI, and I sold it to buy high conviction plays. That caused the April dividend to decrease this year. As of April 2025, my dividend portfolio is valued at $24,000. It's made up of 21 different holdings, each chosen with long-term growth and income in mind. Based on my current positions, I'm projected to earn $533 in annual dividends, which gives me a portfolio yield of 2.63%. I'm really proud of how far this journey has come, from starting small to now managing a 5-figure portfolio that pays me passively every single month. My focus continues to be on high-quality companies that can grow both their business and their dividends over time. By the end of April 2025, the S&P was down 4.95% year to date, marking a bit rough start of the year for the broader market. Despite that, my dividend portfolio has held surprisingly well, ending the month with a positive return of 0.61%. That may not seem like much at first glance, but outperforming the market by over 5.5% in a down environment is something I'm proud of. This outperformance reinforces why I built my portfolio around high-quality, dividend-paying companies. While growth stocks has taken a hit this year, my holdings have shown more resilience, partly thanks to consistent dividend income that helps smooth out the volatility. It also speaks to the value of diversification and focusing on long-term fundamentals over short-term noise. I'm not trying to beat the market every month, but it's encouraging to see that my strategy focused on income, quality, and stability is working as intended. The year is still young, but this kind of performance gives me the confidence to keep doing what I'm doing. Here's the current breakdown of my dividend stock portfolio by allocation. This shows how much each position contributes as a percentage of the total of the portfolio. I'm continuing to build a well-diversified mix of dividend growth and blue chip stocks that offer strong fundamentals and long-term potential. Going clockwise, we have Apple, Colgate, Realty Income, Procter & Gamble, Waste Management, Kroger, Starbucks, JP Morgan Chase, Home Depot, Johnson & Johnson, Nike, AbbVie, Texas Instrument, Hershey's, Pepsi, Visa, Automatic Data Processing, MasterCard, Google, Microsoft, and S&P Global. I'm still overweight in Hershey's, which is a company that I haven't bought for a while. I'm heavily underweight with this position, so any upside movement makes the allocation to go up. In order to reduce my allocation in said company without selling, I'll have to continue depositing cash and buying other holdings. As part of my 2025 goals, I'm inclining more to growth plays. So that means that I'm buying companies like Google, Visa, MasterCard, Microsoft, ADP, and S&P Global. It might take a while since I'm only depositing $100 a week, but brick by brick movements are being made. It's just a matter of time. Here's how much each company in my dividend stock portfolio is paying me annually. These cash flows represent the foundation of my long-term income strategy and reflects how every dollar invested works for me passively. It may not seem like a huge amount now, but every dollar is building a block towards financial independence. With consistent reinvestment, dividend increases, and portfolio growth, this number will continue to rise. Some companies like Realty Income and Hershey's are already putting significant weight, paying me over $70 and $80 annually respectively. Others like Apple, Microsoft, and S&P Global are still smaller positions, but have high quality growth potential and strong dividend increases histories. My dividend portfolio is built on a simple principle. Own high quality companies that pay me to hold them and hold them for a long period of time. This past year has been a great reminder of how different sectors and stocks move on their own timelines. Some names have delivered incredible gains while others are going through temporary drawdowns. And that's perfectly okay. Across my portfolio, I have exposure to consumer staples, tech, financial, healthcare, industrial, and real estate. This diversification helps me balance performance across market cycles and ensures I'm never too exposed to any single sector or company. The top gainers we have JP Morgan, Apple, Kroger, and Waste Management. While the biggest laggards we have Nike, Hershey, Pepsi, and Johnson & Johnson. This is a great reminder that even high quality companies go through downturns, and those red numbers don't shake my conviction. In fact, I view some of these as buying opportunities. Even with some negative positions, the portfolio as a whole remains strong. The gains from my winners easily offset the losses from the laggards. And most importantly, my dividend income continues to grow. Every month, I'm collecting cash that I can reinvest into the same companies or new opportunities. That snowball is slowly picking up speed. So that will be it for this portfolio update. If you made it till this part, thank you so much for supporting me. Let me know in the comment section below how your portfolio performed in April. Hit like and subscribe to support my channel if you haven't. Thanks for watching, and I'll see you in the next one.